Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
One of the big news items out there today is China, over the last 24 hours, let's say, China saying, we're not going to buy any more Boeing jets. So just another escalation in the trade war between the U.S. and Canada. I'm looking at the Boeing stock today. It's off about 0.9%. George Ferguson joins us. He's Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence. George, talk to us about China and Boeing. How big of an issue is this for Boeing?
So I don't see it as being a big issue, right? So this is one of those things that the relationship has deteriorated over a period of time. We're basically writing right now a focus idea on Boeing that we'll publish in the Bloomberg terminal. And as we're doing that research, right, we took another look at when we saw orders from the Chinese airlines for Boeing. And there's been like 15 or 16 this decade. I think 15 came in, I think, last year, of 242 orders from China that are on the books right now. The last real material size and orders from the big Chinese airlines we saw back in 2018. So this is a relationship that's been broken for a while. Frankly, the Chinese haven't really been, like I said, ordering from Boeing. So the bigger issue here, I think, is Boeing delivering some of the airplanes they've already built for the Chinese. Like I said, there's some 240 of them sitting in the order books. I suspect a bunch of them are already made, and Boeing would like to get rid of them. Part of the shadow factory elimination they're trying to do to streamline operations. It's a pain in the neck to have an airplane on the tarmac that's sold that you've got to maintain, but the customer isn't taking delivery of. It'll slow that down. I think it might hasten some of Boeing's push to sell some of those airplanes. The Indians have bought a bunch of them. Maybe they're game for more. But I just don't. This is China admitting what they've already been doing, frankly.
So, George, what exactly is the goal here? I mean, to your point, and also Jefferies analysts, they're noting that Boeing has largely de-risked from China. They said that the country contributing roughly about 5% of the skyline over the next couple of years, but also a source of upside. What do you think the goal is here if there seems to be marginal impact here to Boeing?
Yeah, look, I think it's splashy, right, for the Chinese to make this kind of commentary. And look, I do think there's potentially some upside. So, look, there's a couple things that's been going on, right? China, one, is growing a lot slower since the pandemic. Prior to the pandemic, China would take in 300 narrow bodies a year. More than half of them would be Boeing. And so, since the pandemic last year, we saw about 150 deliveries of narrow bodies into China. They were Airbus airplanes. So, and look, in a global trade battle, China could see a diminishing GDP, right? This is a country growing 8% last decade, 4-ish% this decade. But if they get that, if they decide they're going to negotiate with the U.S., they get some of that growth back on the rails. I think inside some of that negotiation, you could see a requirement to order Boeing airplanes. Donald Trump cut a similar deal in his last administration. So there is some silver lining. And like I said, I think the Chinese they know that Boeing's one of our biggest exporters. They know they'll get some good headlines out of saying we're not going to take any more Boeing airplanes. But again, I think this is a microcosm of the U.S. economy getting uncoupled from China right now.
So this isn't a major headwind here for Boeing, but what do you think are some headwinds that they could be facing? What are some near-term hurdles?
I think Boeing has been down for so long that I think most of the hurdles are clearing and you're going to see a pretty good year. I think the big issue this year is they've really got to get Spirit Aerosystems bought and integrated into Boeing. I think that's well underway. I'm hearing good news from people I know in the industry about quality coming out of Spirit. They've got to get rid of that shadow factory. There's airplanes already built sitting on the tarmac that they're maintaining. That's just a huge drag on expenses. They got to get them delivered out to customers, sold off to new customers, and it's all about in the back half of the year building more airplanes in the factory. We've been watching it in the first quarter of the year. I think they're getting about 20, 25 through the factory every month. They got to keep building on that cadence. That's going to generate the cash and the profitability they need. And oh, by the way, they added $26 billion to inventory since, I think, 2018. We have it in this report. It's some 500 equivalent to 500 737s. As they start building from the inventory on hand, their cash generation is going to be supercharged. They could have a really nice back half of 2025.
George Ferguson, thanks so much for joining us. Always appreciate getting a couple minutes of your time. George Ferguson, Senior Aerospace, Defense, and Airlines Analyst at Bloomberg Intelligence, covers all the aerospace companies and all the airlines. He sees it from the entire 360-degree picture, that whole global aerospace business.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Bank of America reported today. Citibank reported today. I worked for both of those firms back in the day. Merrill Lynch, which is now part of Bank of America, and Salomon Brothers, which is now part of Citi. So I always pay attention to these two names. Both trading up here today, so that's the good news. Let's get Alison Williams in here. She'll tell us the details here. She's a senior analyst. She covers all the banks for Bloomberg Intelligence. She's been working super hard this last 4 or 5 days as all these big banks put out their numbers. Alison, when I think of B of A and I think of Citi, I think of the corporate investment banks making loans for big global corporations and that kind of stuff, as well as going down to the local branch level. What are they telling us today?
So on the capital markets side of things, so your friends, the traders and bankers, really good quarter for trading across the board. We've had sort of everyone come in. Equities trading better. Citi did a little bit better in FIC and banking, so that was a key positive. But generally, we're seeing strength in trading that's helped by volatility and fees stalling, so which we know kind of is a pause. So that's broadly across the banks. The other thing is, Q1 was good, but of course we have not seen the impact of the last couple of weeks. But banks are preparing for that in perhaps different ways. Bank of America kept their net interest income guidance stable, but the positive thing there is that they are factoring in the 4 interest rate cuts. So they're factoring in what we've seen in April. So I think that is generally helpful to the shares. You're seeing them respond today. Also on the credit provision, Bank of America always provides these extra slides. As you talked about, there's all different types of businesses. There's concern certainly on the consumer business, tends to be a higher loss in Bank of America, showing a slide the shift in their portfolio over the long term, but also making the point that, look, they're reserved at about a 6% unemployment rate. That's similar to what we heard from Citi. I'm sorry, that's similar to what we heard from JP Morgan and Wells. We're going to hear more from Citi on their call in a bit. But their losses tend to be lower. This, responsible growth is something that Moynihan has championed. Some have been critical when things are better. Are you taking enough risk? But in a period like today, when we're worrying about risk, I think that gives some cushion.
Mm-hmm. Alison, so up today, we're seeing shares up today. But if you look year to date, we've got Bank of America down 14%, Citigroup down 8%, broader financials down about 1.5%. But that being said, what do you think has really been the drag for them as of late? Because this sounds like pretty decent news, but on a broader scale, that's not necessarily the case.
So I think that what we saw was a big rally in these shares after the election. People were very excited about less regulation under the new administration. And we saw evidence of that this quarter in terms of buybacks. Buybacks were bigger than expected for everybody except for Morgan Stanley. A huge announcement by Goldman Sachs. And so capital return, being able to return more capital, is one of the positive benefits that is coming through. And that, so we had the big rally on less regulation. M&A being helped by less regulation was part of that. We did get the buybacks. M&A is not coming through because there's so much uncertainty in the environment. That goes to some of the comments we heard earlier, just in terms of, pipelines, are they broken or bent? So I do think it does depend. Like if we can get things, changing course, if we get some level of certainty, that can improve. But if there is more volatility, perhaps not. And it really comes down to the economy. So if there is a weaker economy, if there is a recession, not good for financials.
Mm-hmm. So Citigroup in particular, Jane Fraser, she's about a little over halfway through this 5-year plan for a turnaround for the bank. How's that going? Are people liking what she's doing?
I think people are. She's making progress. So we saw some of that this quarter. It's certainly a very long-term story. And a lot of that has to do with, to some extent, when you're fixing things that the regulators want you to fix, that can take some time and it's not fully within your control. I mean, it's within your control to deliver on things, but it's a negotiation, and you have to sort of meet those standards. As we've seen at Wells Fargo, that can take a seriously long time. But I do think for Citigroup, it's the best thing that could have happened to them, because really, the Citigroup is the house that Sandy built and has all these different businesses. And I think finally taking the steps to rationalize and integrate things and improve the risk management systems are a good thing in the long term, even though there's some pain near term.
Brian Moynihan of B of A on the conference call this morning, did he acknowledge the uncertainty and the decline in consumer sentiment just in the last several weeks, and corporate sentiment as well? We've seen polling on that. You look at the University of Michigan data, people are concerned about things. Did he acknowledge that and just maybe think about how that might impact their business?
He did talk about sort of the pivot since quarter end. He talked about that, especially with regard to the reserve build. So again, I think that's one of the things that we're seeing a little bit different at banks. JP Morgan taking a big reserve. Of course, they had a gain that helped to fund that. Wells doing very little, but they were already pretty well conserved. And Bank of America saying, look, we do our reserve at the end of March, but then there are different factors. We can use judgmental factors and different factors to sort of shore up that reserve a little bit. And so even though the headline numbers don't look like, they're taking big reserves, their credit is good. The charge-offs are good. And so the fact that, even just kind of keeping those reserves stable, when your credit is improving, shows a level of conservatism.
Mm-hmm. So big bank earnings kicked off on Friday. We're sitting here Tuesday. You've gotten so many names that you're kind of parsing through right now. But of course, to your point, this is a really uncertain period. So what is a general expectation? Do we expect that investors are going to punish companies harshly if they were to miss? Or does it seem like people are kind of just going along with the flow and seeing what's going to happen given the tumultuous time period?
I think it's, for investors, like so many other stocks out there, right, there's a level of uncertainty. And I do think that, as you said, that so the stocks have come way down. They're factoring in a level of risk, but investors have to feel more comfortable that they have a handle on those risks or clarity. So that could stop people from getting involved. But in terms of, it depends on what happens from here. Do things get worse? Does the risk of recession rise? You could see bigger provisions in the second quarter. And so investors were wondering, will we see banks being conservative? And I think what we saw was banks really saying, like, look, we're going to wait and see.
Okay.
As of March, things are good. We recognize that things are getting a little weaker, but we're going to wait and see.
Alison, thank you so much. As always, appreciate it. Alison Williams, Senior Analyst, covering all the global banks for Bloomberg Intelligence, Citi, Bank of America today.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
One of the big stories that's getting a ton of readership on the Bloomberg terminal is Harvard has hit with financial retribution after rebuffing Trump. So Harvard University President Alan Garber rejected the Trump administration's demands to combat anti-Semitism, citing concerns over academic freedom and government interference in higher education. Let's break this story down with Janet Lauren. She's a higher education finance reporter for Bloomberg News. She joins us here in our Bloomberg Interactive Broker studio. Janet, Harvard seems to be one of the few institutions or entities openly defying President Trump here. What's the view from Harvard's perspective?
Well, it's true. Harvard is the richest university in America. They have a $53 billion endowment. No one comes close. 70% of that money is restricted, so it doesn't appear as massive as it seems. But in theory, they could afford to try to spend some of that endowment. Last year, the endowment contributed $2.4 billion to Harvard's budget of about $6.5 billion. But, the federal government has, they get a lot of money from the federal government. And I guess the question is, are they willing to risk it? And you saw President Trump on Truth Social just a few minutes ago saying, well, he's perhaps going after their tax-exempt status. So it's unclear.
Wow. I mean, I just actually had some experience over the weekend on this at a place of higher education about the finances there. And for top research universities, and this is a private-public relationship that really started after World War II, which is when the America said, we need to be the leader in key industries, technology, healthcare, so on and so forth. We think the best way to do that, this is the U.S. government after World War II, is a public-private kind of relationship. And right now, the relationship is about 2/3 federal funded, 1/3 private funding, including the universities themselves. That's big money for a lot of these universities.
It is big money. And, we've written that many times. And the federal government also gives students billions of dollars to attend universities in the form of federal student loans and Pell Grants and other grants. So colleges are quite dependent on the federal government, and they're exercising their views and saying, look, we give you a lot of money, and if you don't make changes, we have the right to take that away if they say if you don't follow the law. And in talking about their issue in some ways DEI, if you don't follow the law of their saying discrimination, we can yank your money away.
So with the sources that you're speaking to, Janet, is the expectation that Harvard will remain resolute in this where they are right now, or do people think that they're going to essentially cave? I mean, I saw you wrote a story earlier last month about the Columbia president stepping down, and I remember that they had initially been kind of trying to stand their ground as well. So what are you hearing from sources about what people are thinking Harvard might do?
Well, I don't think it really matters what people think. It matters how they're going to get through this, because they are dependent on the government for a lot of money. Now, if you look at Columbia is poor compared to Harvard. They only have $15 billion. So it's uncertain what happens next. I mean, the ball is in Harvard's court. Are they going to litigate? That could take quite a long time. What happens if labs are closing, or they're from past experience, we're going to get stop work orders. We've sort of seen this already with a couple of schools getting stop work orders and getting money frozen.
I mean, what are some of the alumni? Is there a consistent reaction from the alumni, either in support of Harvard or maybe not supporting them?
Well, I think some alumni have posted on various social medias. People are happy that somebody has stood up to Trump, but you have to remember the federal government has a lot of power.
Yes.
And perhaps $53 billion seems like a lot of money, but I mean, how much money does the federal government go through in one day?
So what are next steps here? I mean, I see that the Harvard has officially rejected the administration's demands here. So
we're in uncharted territory.
Okay.
If you asked me to predict any of this, it's hard to know.
I see in your story you say that former Harvard president Larry Summers says that the statement drew support from him. He said that he hoped other universities would adopt a similar stance to defend academic freedom. Is he alone in that, or are you hearing other people on the same side?
I think there is an interest in having entities try to stand up to Trump. We saw this with some law firms, but in some ways, the federal government holds all the cards.
What are other universities doing? Have we heard from anybody else? Has anybody been in a target like Harvard has?
Princeton has.
Okay.
Princeton's president has been outspoken. But keep in mind, Princeton, while they've produced many Nobel Prize winners, they do not operate a medical school. Most of the grants are NIH funding, grants to medical schools, grants for scientific research. There's only a handful of schools that are receiving the kind of money that Princeton, Stanford, MIT also does not operate a medical school, but they're had also received cuts in Department of Energy and Department of Defense. So remember, NIH is one federal agency. It's the biggest, but there's a lot of them out there. I believe Cornell had frozen funding from agriculture.
Interesting. I mean, and again, these are grants from the U.S. government in most cases to fund research and development.
Correct.
Mm-hmm. Right. They're not. These aren't. We're giving you money just to give you money. They're investing in research. They're buying research.
Mm-hmm. That is correct.
Okay. And earlier in the conversation, you mentioned DEI. How has Harvard been really viewing the pushback from the government on that? How have they been responding in about 30 seconds or less?
Well, we did a big story earlier this year about the decline in Black freshmen, first-year law students at Harvard Law School, and they have to follow the law.
All right, very good, Janet Lauren. Thank you so much for joining us here, Janet Lauren. She's a higher education finance reporter. Again, talking about Harvard and its discussions and I guess differences with the U.S. with the Trump administration. And the financial risk associated with that. So I'll have to see how that plays out.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.